Thank you for tuning in to another edition of the Volcker Report. This report is for trading Thursday, December the 5th. I keep saying November. This is a chart of the S&P 500 E-mini futures contract. As you can see, we are now locked into this corrective negative downtrend, this downtrend channel here. We're now 3 bars into this from the warning that we got on November the 29th that I told you about. Nice downtrend here. Looks like we did a spike on Wednesday's close, a spike down, and setting up for a possible reversal. And I use the word possible rather loosely because it's not a guarantee that that's exactly what we're looking at here. So I'm going to say possible correction at this point. Excuse me. Because of the downtrend channel on the swing VIX, I'm going to say that we're still correcting here. Even if we close higher on Thursday, we still have major resistance to deal with up here. Major resistance. So I'm going to have to maintain the downtrend on this one here. But the fact that we did reverse and trade above the intraday support resistance on the 60-minute time frame, I would have to say that it's a strong possibility that the downward correction might be over. This is an abnormal situation where you're correcting and then you reverse like this and almost, close positive. Let me go back and show you what I mean. Let's just pick one at random here. Let's just go back. See here, when the market started to go down, all right, this bar here, it didn't get anywhere near the intraday RSID, the resistance support. Okay, that let you know that the downtrend wasn't over. On the following day here, you got a warning bar that more downside was coming. But on an intraday level, you did take out intraday RSID only because the trading range was so narrow. When you have narrow trading ranges like this, then it's very possible that you can take out RSID. It doesn't necessarily mean a reversal, as it did here. And then we hit lower, and then on the following day, we totally reversed. Kept going higher, crashed back down again, put in a new low, sideways, and then we rally again. So, like I was saying, it's hard to know sometimes what the market is going to do and if you can gather any kind of real momentum. And sometimes you just have to either chill on the sidelines for a day or so, or just get into the washing machine where you may get whipsawed for 2 days, but then you come out of it. Like here, you would have rolled this down here, right? You would have got stopped out here, okay? Both long and short would have been triggered the next day, as you can see. It's right here. And then you would have noticed too that on the next day, the short would have been triggered, but not the long. And then the following day, you come out of it. Alright? So a little whipsaw here, but you would have came out and look what you would have caught. So you just have to stick with it. Okay? That's all I can tell you at this point. So for trading on Thursday, this is how I see it. This is a rough draft. I would say long at 1809 3/4. Short on the continuation at 1788 3/4. So that's how I would see that. Alright, switching our focus now to the crude oil. Still in the bear market. We did come up and bump up against the trend line resistance. Strong possibility we could break that trend line resistance, but then we're going to hit more resistance at the bottom of the Kumo cloud here. And then we'll probably more than likely fall right back down into the volatility channel again. So the analysis has been spot on, especially in this crude oil. It's been doing exactly as anticipated. We have an uptrend channel here, positive swing VIX, nice blue bars here, nice uptrend channel. All right. a lot of talk about inventory and production and the U.S. starting to produce its own oil. I have to do a video in the future about that. I don't buy any of that nonsense. Just so you know, I just don't. I don't agree. I really, really don't agree. I think it's a bunch of nonsense. It's easy to say that now after the U.S. has spent billions and trillions of dollars building up those oil pipelines and going to war and having tens of thousands of men, women, and children murdered for our oil expeditions and taking other people's oil, only to say, oh, we don't need Saudi and Iranian oil or blah blah blah, we're going to produce our own. Whatever. That's just a bunch of nonsense, propaganda and rhetoric. Anyway, I digress. For Thursday's trading, this one's a no brainer. Play the continuation long at 97.64. If you can break 97.88, you should be able to get up to the Kumo, bottom of the Kumo, around the $99 to $100 barrel range. That'll be your initial profit target. On the short side, short at 96.94, and you're looking for it to get back down to the bottom of the range at the 91 handle. Okay, taking a look here at gold now. Gold has gotten back inside of the excuse me, of the volatility band as anticipated. Strong, powerful reversal from the low, support low. But as you have seen and learned in these videos, it doesn't necessarily mean anything. I do see sideways to slightly higher prices within the next 3 to 5 days, though, as we build from this base here, from the negative pulse wave. I think we'll probably get back up to this somewhere near 1290. Right here, this is 1248. I think the range is going to be probably if we can get there. Well, let's go here first. The first initial thing I see here is 1286. Alright, 1286 is going to be your first major resistance. That's a major resistance. But I do see prices getting there within the next week or so as we consolidate. 1286 is a strong resistance and a nice magnet that I see price reverting back to. So that's what I would see happening right now. We still are negative. We have negative momentum built in to this market. So like I was saying, you're going to want to play the bounces as you can, but just remember you're still in a bear market downtrend. So for Thursday's trading, another tight range, long at 1252.20, short at 1231.60. Okay, moving on here. Last chart will be silver. Same thing as the gold. We had that warning bar. We did put in a new low, but then we totally reversed on an intraday level and closed higher. Alright, so what are we saying here? Yes, we're still very much bearish. We have a tremendous amount of selling pressure still in the market, but we are trying to develop something with the positive pulse wave. Positive swing VIX. See the blue bars, positive bars, even though we haven't done anything but head lower. Sometimes you get that that diversion where price and indicator are moving in opposite directions, but the indicator does lead price out 3 to 5 days. So let's see here. We got 1, 2, 3, 4, and 5, and now here's the price trying to catch up now, and we'll see if we get follow through for Thursday. But we do have a lot of stuff, bearishness built into this thing here. So I want to say right now you need to watch your back if you're short, because this market wants to go to $20.92 from where it is now. So that's a little bit more than $1 where we closed, but that's the initial strong resistance. That's the magnetic force that the price is going to revert back. That's the mean that price is going to revert back to. So you're going to want to be wary of that. Understand that that is a major issue right now. That price is a big deal. Okay, please be mindful of that. You're gonna want to watch yourself with that. If we get below that, after just nipping it, it could set up another incredible down leg. So just keep that in mind. All right. So for Thursday's trading, in the silver, long at 1985, short at 1932. And that's all I have for now. So remember, take what you can and give nothing back.